Good morning, everyone, and welcome to this morning thinking, one of our business thinkings. You may have noticed in the last few months we've started doing something different, something that we don't think we see anywhere else, which is to sit with the chief executive of one big business and spend an hour trying to understand the choices they make, the challenges they face. My name's James Harding. I'm the editor and one of the co-founders of Tortoise. And I'm particularly pleased this morning that Anne Boden, the chief executive and founder of Starling Bank, good morning, Anne, and welcome. Thank you for joining us, is here because partly because there's something so interesting about not just being the chief executive of a business, but being the chief executive of a challenger business, something that is intended to disrupt the status quo. And Anne, by the way, I need to give a quick plug to this, Anne, because I read your book, right, Banking on It. I know I made it sound like something of a boast, but of course I read it. We're about to have a conversation. But the thing that is terrific about it is the way in which very unglamorous things become very dramatic, right? The moment that KPMG says, yes, we're in, even more dramatic and exciting is the moment when KPMG says, yes, we'll operate on a contingency fee because we know you've got no money. So I wanted to talk about that. I wanted to just invite people into the experience of a thinking, as you know, Anne, because I think you did one of our very first thinking. The aim is to try and have an open news meeting, i.e. everyone to weigh in. So, you know, people have views on banking and rightly so. Please share them in the chat. I'm going to bring you in to talk to Anne, to share your point of view. We have one loosely enforced rule, which is no questions. We want people's points of view and experience. So do weigh in and bring those to bear. And I hope in the course of the hour we'll learn a lot from Anne, but also from you. But Anne, can we start with the story of becoming an entrepreneur? Because you say early in the book that you were an unlikely entrepreneur in the sense that you were a 50-something woman starting a bank. You were also massively institutionalized, right? You'd worked only in these enormous organizations. So can you just tell us, to start with, a little of what it's like to go from having, I imagine, quite a firm business card with an embossed logo to sitting on your own and saying that you have an idea?
It's very, very scary. I quit my job to start a bank, and I thought I would come back to London and start knocking on doors and saying, I got this great idea. I'm going to start a new bank, build all the technology from scratch, apply for a brand new license, and build a competitor to the big banks from scratch. And I only need £300 and £300 million, and will you give it to me? And people thought I was crazy. First of all, the idea was a bit too audacious. People thought it was impossible to start a new bank. It was impossible to start a new bank based on new technology and actually build it from scratch, especially when all the big banks were spending billions and couldn't do that. And thirdly, I had absolutely no entrepreneurial experience whatsoever. And what I wanted was a sum of money that nobody gave to startups. So and you don't have a business card. You do sound very silly explaining these things, and people divide into two sets. You know, people who say thank you very much and are very polite, and the ones that give you a huge amount of feedback, most of which is not valuable at all. Yes, it's very humbling, and it's very, very lonely.
And just to tell us through, because the interesting thing is, I was intrigued that you didn't start with money, right?
Yeah.
You in effect started, well, you tell us whether you think you started with a criticism of the established banks or with an idea, but you didn't really start with a backer, did you?
No, I didn't. I didn't find a backer for 2 years. What had actually happened was, after 30 odd years in the banking establishment, as being, I'm a technologist, I'm a computer scientist by training, I became very disillusioned that the incumbent banks, the traditional banks, were really backward looking and weren't really embracing technology at all. What they were trying to do was to fix the problems of the past. And I went around the world talking to lots of banks, asking them about what they were doing. And everybody was telling me the same thing. And it didn't seem compelling. So I started thinking about what needs to be done is somebody needs to start a new bank, start from scratch, take the best technology from Silicon Valley, make it really relevant to today's consumer and start again. And that's what somebody should do. At the same time, I was thinking, well, how long can I do the job I'm in? I'd gone into Allied Irish banks post-crisis to do the turnaround. And the banks had left Ireland in a very, very sorry state. And I was trying to fix that problem. So on one hand, during the day, I was making people redundant and then dreaming about a new bank. I never actually thought that I'd be the person to start the new bank. But one day I got up and decided to put the two things together, quit my job, and decided that bank was going to be started by me.
And can I ask you about it? There's early on in the book, there's a passage that made me think two things. One is, I have to confess, Anne, that I never want to go on holiday with you, because you take a break from AIB, you go on holiday to Australia, and you spend the morning in the Commonwealth and Westpac Bank operating, sort of, sitting behind the counter observing branch operations.
Yeah,
So I
yeah,
thought,
yeah.
well, that's not necessarily my idea of a holiday. But the thing that intrigued me about this was that at the root of starting a challenger bank is the assumption that the existing establishment banks, for all their strength, are not going to be able to change fast enough or profoundly enough to stop the success of someone who's mounting a challenge, who's a disruptor. And I wondered whether, since that day that you sat there in that bank to today, whether or not that's proved to be the case, whether or not actually you've been surprised at how capable those big institutions are of change.
The big institutions have a different problem. They're sitting on decades of old systems and lots and lots of legacy from having done things wrong in the past, and also a legacy relationship with customers. I remember being on a panel where the CEO of a very, very big bank, and him basically saying to me they had legacy systems, legacy employees and legacy customers. And I was shocked. And he actually felt that the history was holding him back. And I came to the conclusion at that point that the big banks would take us very, very seriously, and they do. In all the big banks all around the world now, they have strategy days where they go off and they study banks like ourselves, and we are very, very interesting to them. But it's not that they can't copy everything we do, because sometimes I drive, and see a billboard announcing a feature that we launched 2 years ago. They will copy absolutely everything we do. What they won't be able to do is copy our cost base,
Right.
because of the advantage in that we have a couple of hundred engineers running technology that do releases 4 or 5 times a day. So we have new software being updated 4 or 5 times a day. The big banks are sitting on 2 billions worth of cost base and only spend about 5% of that on doing new things. So the big battle is going to be the cost-based battle rather than the innovation battle.
And that gets to the central idea, doesn't it? Your big idea, like a lot of these, is obvious. I was reminded of David Letterman when he announced one evening that McDonald's had come up with the idea of the bacon, lettuce, and tomato sandwich. It was like, do you think it'll ever take off? The essential idea in Starling is the current account, that you could actually make a business out of the current account. And for people who are not in banking, that doesn't sound like a heretical idea. That sounds blindingly obvious. But for people in banking, that is a very bizarre idea, because the current account is like your letterbox. It's not necessarily a place that people think you're going to make money. For many banks, they think it's a cost rather than a profit center. So can you just explain why you think you can make money off the current account, and not just by cutting the costs of the operations of the bank, but actually increasing the profit margin on the current account itself?
Yeah, if I can give you an idea of the thinking that goes on in big banks about current accounts. People sit in a room and they discuss, okay, we have this big problem, the current account, which is at the moment we have all the payment systems, we have all the branches, and all of those services are there to support the current account. And this current account is loss making. It is difficult for us to run. It doesn't give us, the bank, any benefit. It's something we just have to do for customers, and they talk about the fact that they'll use that current account in order to cross-sell other products. Let's sell mortgages off the back of it. Let's sell X, Y, and Z off the back of that current account. They don't have conversations about what that current account can do. If you think about that conversation in Starling, it's about, right, we've got these customers who need financial service. They need to make payments. They need to understand how they are spending their money. They need to know how much they can save. We think of it that current account provides a service to the customer rather than a drain on our resources. And when you change the mindset, you have a very, very different relationship with customers. And you can actually build technology that helps them manage their money, whether you have savings goals where you can have a picture of something you're saving for, a picture of, your holiday to Australia or buying the new sofa, and you can save up for it, or whether you have all the categorization of how you're spending the money, or control your debit card so you can switch it on and off. All these features are because we think of what we can do to help a customer spend their money and manage their money. We don't start off with the assumption it is a drain on our resources and we need to drive usage down or actually sell other products on the back of it.
But Anne, what I don't understand is that, and maybe I misunderstand this, but my understanding is if you get a person as a customer and they open a current account, the actual money that you can make on the amount of money they've got in the current account is often minuscule. You can't charge them a fee for the current account. You make money by charging them those other services. Take a mortgage with us, take out a commercial loan with us. These kinds of services are where the bank makes money. But my understanding was Starling started out saying, no, that's not our business. We actually just want to focus on the current account. And if you want to get a mortgage, we're going to help you get one from someone else. So I still don't fully understand where the benefit, not to the customer. I understand the customer focus. What I don't understand is the institutional focus, the investor focus for people who are just running a current account business.
Yeah. Okay. Well, if I try to explain how banks actually make money from current accounts, every time a customer, and by the way, Starling is monthly profitable. We have 2 million customers. We have 300,000 business customers, and we're profitable. So how we make money is not by charging fees to customers. The current account is free. We make money every time somebody uses their debit card. So every time somebody uses the debit card, the banks make a tiny fee. Secondly, we have in the balances on the accounts are sufficient for us to currently have 5 billion of deposits on Starling current accounts. So we're no longer a tiny bank. We have 5 billions worth of deposits, and we use those deposits to create a investment portfolio, which we get earnings from. We lend to SMEs, and we also provide lending, provide facilities to other fintechs that lend to SMEs. We have been participating in the government bounce back scheme. We've done 1.5 billion of that lending, which is our balance sheet. So we make money from interchange and from the value of the balances on the account. And the interesting thing about those balances and how they are moving over time, what we are finding is that the longer people stay with us, the more they trust us, the higher the balances, the more they keep on the account.
Interesting.
Our older cohorts, our newer cohorts, people are coming on board now compared to coming on board 3 months ago or 6 months ago, tend to be using us more and having higher balances. And our customer numbers are growing. So we currently have more than 5 billion of deposits.
So Anne, I want to, in the time we've got, talk about how the bank grows, how challengers have responded, and a little bit about the impact that the bank has and the disruption it has on the economy more generally. But I said I wanted to make sure we were all talking, and there are a number of people who raise questions even as we go, or thoughts, I should say. One of the ones that is from Rosalind Singleton, and I wanted to see if I could bring Rosalind in, because the interesting thing, and you get to touch of it, it's a flavour of it as you get towards the end of the book, is, you know, there's something quite romantic about going and having, you know, a boiled egg and a piece of toast and then traipsing around the city getting rejected. There's something less romantic about being in a bigger business as it grows and trying to understand how you manage that culture and how you grow a business. And Rosalind raised that point. Rosalind, are you there? Hello.
I am. Can you hear me okay?
You fine, yeah.
Okay, good. Yeah, and I wanted to ask, obviously, Starling's had its growing pains as much as many other scale-ups have, and those sorts of things. And, you know, the journey to profitability is quite a difficult one. So I was wondering how you coped, particularly through these sort of well-documented Monzo problems and all those sorts of things, particularly when, you know, equity shareholders can be quite loyalty driven, very emotional, much as they think they're not, and all those sorts of things. I was wondering what that was like and how you managed to cope and continue to lead a business when, obviously, again, you get tribal loyalties, particularly in very purpose driven businesses.
Mm. Yeah, the very interesting phrase there. You said tribal loyalties. Yes, the VC world is not very diverse. You know, sort of, you know, to be quite frank about it, the majority of VCs are sitting there. They are guys in their early 30s, wearing gilets, and all roughly look the same. And you know, and I spent many years going into those meetings where you have to sit opposite a bunch of guys who are probably looking at me and going, first of all, what does she know about entrepreneurship? Is she really a tech wizard? She says she can build all these systems. Do we believe her? You know, I don't look like a computer scientist. I don't look like a computer geek. I don't look like somebody who can build a tech business. And therefore, they had to believe an awful lot. And they had to convince their bosses, even if they believed in me, they had to convince their investment committees that I was a safe bet. So yes, there is a bit of a tribal thing going on there. As far as whether, you know, sort of how you cope with that, how you build the resilience. If I knew how hard it was going to be when I started, I probably wouldn't have started. You know, I think you need a bit of naivety and a bit of optimism in order to take these things on. And people do give you, if you ask somebody who's been through this, you know, advice, they'll tell you it's pretty tough. Do you really want to start it? And I ignored all that advice. But I was absolutely determined that somebody needed to found a bank, somebody needed to build this thing, and I was going to have a bash to do it. And yeah, it worked out.
And
sorry, Jane. I was going to ask more about the split with Tom and the Monzo team as well, because, you know, for your team, you know, in a startup and a scale up, the team is everything, and they look to you and the rest of the leadership team, and there's a degree of sort of faith, if you like, in that. So how did you manage through that? What must have been very difficult between the two of you, and obviously trying to at the same time look after your team and end up actually both with very healthy businesses at the end, because that's quite unusual. Normally somebody just vanishes into obscurity.
Yeah, the story is a very unusual story. I built a team. I hired an ex-entrepreneur because I think I needed an entrepreneur in the team. He raised some money and left with the whole team, leaving me on my own, having to start a new team. And we competed head to head for years. It is, and what I pride myself on is, if that hadn't happened, we wouldn't have had the challenger sort of environment in the UK. Starling then created Monzo in some respect. Monzo and Starling have changed the whole economics, changed the whole banking environment in the UK. The big banks have had to respond. And as well as changing and building a bank, this all started a real change in the banking industry. And this is happening all around the world now. And we are often approached by banks in Asia, in Australia, in the States, about trying to do the same thing there. This big change is happening in the UK, and it's happening in the UK because of the regulatory environment and the fact that it has a finance base, and is also developing this fintech expertise as well.
Ros, thank you. Anne, you said, you may not have started it had you known some of those difficulties. You just described one, the breakup of the team and the challenge to your challenger bank. When you look back now, and Starling's clearly got a long way to go to do the things that you still wanted to do, but even when you look back now over the last 5 years, how do you characterize the things that are most difficult?
I think there's an issue where if you need to do something which is going to make a big difference, which is going to change an industry, create a new great company, do something that's really worthwhile, it's going to be very, very difficult, because if it wasn't difficult, everybody would be doing it and it had already been done. And hundreds of people, hundreds of sort of businesses start on the journey every year to do that. And I'm saying quite in a limited area. Dozens of people, dozens of teams go to the PRA and the FCA every year saying they want to start a bank. Mm. Very, very few banks actually get a license. Mm. And when they get the license, very, very few succeed. Mm. The regulator sort of termed the 4 banks that got the license roughly when we did as the digital 4. Mm-hmm. We were the first banks to go through, and probably the last of that era. It was Atom, Tandem, Starling and Monzo. And it was only Starling and Monzo that actually got to market with a current account. And it's only Starling that's actually become profitable. So lots of businesses, dozens of businesses, and if you look across the whole of the business spectrum, thousands of business, hundreds of thousands of businesses started every year. Very, very, very few succeed. Mm-hmm. And each one of those entrepreneurs thought they were going to make it, but very, very few get to the end.
And so I'm just interested, because I wondered whether or not the difficulties are emotional more than institutional, whether actually the difficulties are the things that you just touched on about the breakup with Tom Bloomfield and the challenge. They're internal. The fact that it's difficult and the regulatory process is a headache, the fact that the big banks are out to sort of squash you're sort of in for that from the start. I wonder whether the things that are most testing are the ones that are actually personal rather than structural.
Yeah, there's when the Monzo issue hit and the team left, and I remember waking up, sort of seeing an article in the Financial Times describing what had happened and really saying that we were finished, suggesting that Starling, would never fly again, and all the various puns. And that was really, really tough. It was very public. It was very humiliating. I'd had a career, 30 odd years, and had been very successful in lots of different places. And all of a sudden it was all over, there was a whole page of describing, my failure. And I came to the conclusion that I was trying to do something extraordinary. I was going to do something that nobody ever done before. And I shouldn't be depressed about that. I should just try even harder. And I think that many sort of business people should actually think about taking a few more risks and risking their reputation, not in terms of doing things that are bad or not good for customers, but trying a little harder to do something that's never done before to make things better. There's so many people afraid of failure.
Yeah.
And once I got over the issue of being afraid of failure, that was fine. I could do so much more. And once I got to terms with the fact that I'd been humiliated by this issue of Tom and the team leaving, nothing could be worse. I was going to fight, and I was going to build the best bank in the world.
And has it changed the way in which you've behaved at work since then?
I think I've changed in the process. I think everybody that's learning changes. I've had a huge amount of experience. Every day in Starling, 20 things happen. In big organizations, things move very slowly. At Starling, things move very fast. We are very, very honest at Starling. We are a group of people who really believe that we can make a difference in people's financial lives. And we're on a mission. And that attracts huge talent. It attracts people who really believe that we can do better. We're a commercial organization. We are, we intend to make profit, and we tend to grow, and we're not a social enterprise. But we attract people to Starling who really want to make things different, who are really enjoying the intellectual challenge. We like thinking about things. We like thinking about technology. We like thinking about how we can make things better.
And it's so interesting that the temptation with this is to delve deeper and deeper into the sort of psychological experience of setting it up. And now I'm going to do this weirdest of handbrake terms, which is from the emotional nature of setting up a bank and building a team and the pains and struggles of that, to the kind of big picture of the banking sector. And Ursula Mann, I want to bring Ursula in because she made a point really early on about the extent to which you act as a prod to the established banks to change. And I'm intrigued by that. Ursula, why don't you put that point to Anne? Oh, sorry, Ursula, just let's wait till you're unmuted. Have you unmuted? Will you unmute? There you are, far away.
Thanks, sorry. Yeah, typical technology problem. I've seen it. I joined Starling early on because I had experience with TransferWise, which really disrupted the industry for me, being American in the UK, for getting money back and forth. And I was so thrilled with the first account, and I've loved it. We've joined up and done transfers. I now have my, it's my big bank now. But what we've had for years, one of the big banks as our main bank and has a lot of our products and things. And what's been fascinating is to watch them catch up slowly over the last 2 years. So it's one of the things that's really valuable, I think, for everyone. I think what you're saying about the sort of intellectual side of it, it is changing the world for everyone. So even my in-laws, even my, everybody who's a consumer banking customer is starting to get what is an amazing product, even in their old accounts, and they don't recognize where it's coming from. It's so funny because I'm like, oh, I know where this is, So yeah, so absolutely. For me, one of the things that's really fascinating, why I wanted to listen to you speak, was just how critical it was to have that concept of what could we do so differently that would just get that loyalty and that and change people's lives on just a day-to-day basis. And the savings bits and all of the things you said on your consumer account are just massive, and they're changing the big banks now. And I think that's really interesting to be able to go from a sort of challenger to being the leader essentially of all these services for the whole industry.
Yeah, the wonderful thing is that, sort of Which named us the safest bank and Which named us the best current account. Looking back 7 years ago, did I really think that that the big banks were spending billions every year on technology, and we could build something that was better and have millions of customers and be growing fast and be profitable? And yeah, that was the dream. When I set out to do it, I knew the numbers well enough. I knew the tech well enough. I spent time listening and talking to people from Silicon Valley, from tech companies, and I was convinced I could do it. But did I think I could pull it off? Probably no, but I had to try. And now, 7 years later, we have millions of customers and we are the top rated bank.
Ursula, thank you, and Anne, thanks. I'd love to just sort of get into some of the details of the banks and the sort of real business challenges that you now face. Actually, Jason Nisse, I should tell you that Jason Nisse and I started out as business journalists together, and not surprisingly, he sort of got to the point of a couple of the big challenges here around interest rates, around the business model itself. And Jason, I don't know whether you're there and actually want to put the points to Anne directly.
Yeah, sure. First off, I'd like to say I'm a very happy business customer. Not only do you have a great app interface, but if occasionally anything goes wrong, you've got the best helpline, apart from American Express, which has easily the best helpline of everybody. You're the second best. Good. I just wanted to ask you, there are two big challenges, I think, external to you. One is long-term low interest rates, which means that people, don't get much back on their savings. You don't get much back on money held on a current account. And secondly, the uncertainty around Brexit and the fact that the UK has failed to get an agreement on a financial services regulation in the Brexit agreement. How big a challenges are those to your growth?
Okay, first of all, on interest rates. Interest rates are very low at the moment, and current accounts are less and less profitable the lower the interest rates get. So we make profits on current accounts even at these rates. By the way, the markets at the moment are looking at perhaps there's going to be a bit of inflation is going to drive interest rate rises, and we could be looking at a bit of an uptake there. So I'm not worried about interest rates. And by the way, Starling has built its systems for negative interest rates. And therefore, if we ever had to go into negative interest rates, the big banks would take probably about 18 months to 2 years to get there. We're already there. But I don't think negative interest rates are going to come. So, but we've done it just in case. The second thing is about Brexit. if we hadn't had Brexit, we could have passported from the UK into European countries. So we could have used our banking license and launched in France, Germany, whatever, across the whole of Europe relatively easily. Brexit has made that impossible for us. And therefore, we've had to apply for a banking license in Ireland. And we have been going through a license application there for some time. Getting a banking license is difficult. It is difficult in the UK. It took us 3 or 4 years. It is something that all new organisations have to go through. But we intend to use our banking license in Ireland in order to passport into European countries, and we'll have our European headquarters in Dublin.
And thank you for that. Can a couple of other things on that, on the sort of next steps of the bank. One is scale, whether or not there needs now to be, actually the sort of, despite the romance and the excitement of being a startup and the challenger, there's a scale issue here, and whether or not the next phase for, whether it's Starling or Monzo or any of the others, is going to be a period of consolidation, either with each other or with, I saw you were saying to Sifted the other day, you know, that maybe finding a lender, a P2P lender. Can you just explain a little bit about those choices that you face now?
Yeah. Okay. First of all, on the scale issue, Starling is capable of operating at scale. More retail accounts swapped to us in the quarter before, in last quarter, than any other bank. So more customers switch to us than switch to Barclays, more customers switch to us than Lloyds, whatever. So we're already coping with scale, and we have millions of customers at present. And we have tested our systems, and you know, we run test systems in the background all the time, and they're operating over 10 million accounts. So scale itself is not an issue to us. One of the big issues we have is that we're growing very, very fast. And we now have, and we're growing very fast on a demographic of customers that are mainstream customers. And that market is very deep. Lots of new challenger banks go after niches. Starling is in a deep market of people like us. It's a big market. And that market means that we currently have 5 billion of deposits, and it's growing very fast. So we're having to find ways of deploying that. So we're probably going to be looking for a lender to buy in order to have new ways of deploying those balances. This is, if I look back to the business case that we prepared for the regulator 5 years ago, at this particular point in time, I think we were supposed to have 600 million of deposits. We now have 5 billion. So so the growth trajectory has really outstripped.
And what's the animal farm risk in that, Anne? That you end up becoming the kind of bank that you sort of get away from. You own a lender, you're then managing, as you say, not just the deposits, it's not just the margins on the purchase transactions. You know, you're managing a much more traditional balance sheet.
Yeah, absolutely. And I think that, you know, lots of people ask me the question, how do you prevent the legacy happening? Right. Yeah. You know, the big banks have legacy. How do you prevent that legacy happening? And I say, you don't prevent it happening. When we're as big as Barclays, we will have legacy. It is inevitable. The new generation of banks, Starling, will be different. We have different values. We have different ways of going about things. Our culture is very different. But we will be disrupted by the next set of banks and the next set of businesses that come out in 10 years, 20 years time. And that is inevitable. But what we've had in the UK, what we've had in the banking industry for far too long, is that we have not had disruption. Most other industries get disrupted by newcomers because of the regulatory environment of banks, because they're not allowed to fail, because it is so difficult to get a banking license. Nobody's been allowed to come along and disrupt them. They have been protected. And we have, all of a sudden, in 2014, there was a change in the regulation that created a window for banks like Starling to come in and challenge. And most people didn't manage to do it. But Starling has got to a situation where it's been allowed to challenge the big banks. But what you find is there are other challenger banks that have taken on easier things, whether it's a Shawbrook or an Aldermore or a sort of Oak North. These are banks that have taken on niches where the big banks didn't want to play. Starling has taken on the big banks where they play and is competing and is winning. And that's never been allowed before. It's been allowed for the first time over the last couple of years.
And let's remember, there were reasons that it was actively encouraged, because it was felt as though the dominance of the big banks was inhibiting enterprise, was actually a drag on consumers and customer choice. So there was a big policy push around challenger banks. I just wondered whether we can pick up on that. I wanted to bring in Sudhi Piggott and John Farrow, because when you say, Anne, that the market is the mainstream market for people like us, if you step back and you look at another sector, the sector that I know well, media and information, a decade ago, there was huge excitement around the democratization made possible by the internet. Right? Mm-hmm. And what we then learned was, of course, that actually digital services are genuinely better for some people than others. It doesn't even the playing field. And one of the concerns around digital banking is that essentially it's good for affluent, metropolitan, younger, better educated users, but actually it's not necessarily going to help with the financial exclusion problem. It might make things worse. And I just wanted to hear a couple of voices before I came back to you on this broader question. Sudhi was talking about who's the bank for and how you think about it. Sudhi, why don't you raise it? And I'm going to come to John, John Farrow, who's talking a little bit about the third sector and charities. Sudhi, morning.
This is probably quite a naive question, but I'm really interested in you as a woman who really believes in doing something differently and just gets on and does it. And I'd love to talk to you separately about that. But for someone like me who's been a journalist all their lives, never earned very much money, it's always precarious, sometimes it's good, sometimes it's hovering among the overdrawn. I mean, do you cater for someone like me, or do I just stick with the bank that my parents opened for me, which, hasn't done me any favors, but, you never know, but I'm not likely to be very wealthy.
Okay. You were just the person that we built for, right? So whether you have a limited company, whether you have a sole trader, you run your business through a trader account, or whether you're employed, it's all about making the most of your money, understanding where it's going to.
I don't do anything.
Yeah, and the important thing is it's really, really easy. See, the world is divided into the people who have the Sunday night spreadsheet where they list everything out, or the people who don't open the envelopes, right? And I think that's stressful. You need to have something which is, you have all the tools at your fingertips to do everything you need. And if you are running a small business, or you have some self-employed income, whatever, we will actually help you. We have some tools to help you raise the receipts. We even calculate and allow you to do your submissions into HMRC. It's all about making things easy for you. And it's not, try us out and you love us. And I'm going to love to talk to you about it. And I love talking to customers, by the way. So because I think there's so much stress in money. And if you haven't got any money and you're managing to a budget, life is so painful. And, and whatever we can do to to help people and be kind to people and not rip people off. The big banks for so many years have made money on current accounts by ripping people off and charging them for things when they didn't know they were being charged.
Yeah,
If they went over into overdraft, they'd actually, if they had a direct debit sort of declined, they'd charge them. That's wrong. And I think we have to be fair. And it's enough profit in a current account not to be hard on people. It's possible to do it.
Sudi, thank you very much. And also thank you for making me aware of the pink Magimix, which I hadn't realized was part of their range.
Oh, yes.
I'm jealous. John Farah, can I also just bring you in on the same point? Because I think you're talking about, this is a big issue, isn't it? Banking to the charitable sector. So do you want to just raise the point you're making?
Yeah, thanks, Anne. Thanks for this. It's a slightly different question. I mean, I work in the charity sector, but I'm based up in Stoke-on-Trent in North Staffordshire, and financial exclusion is a big issue for us up here. Lots of people struggle to access banking facilities. A few years ago, a group was formed, a financial inclusion group, to try and address that issue if at all possible. And we've seen, we've been involved with a credit union that failed, and lots of different attempts to try and get people, who are excluded into inclusion. And I'm just fascinated by that whole growth of the technology and the way in which you use it, and wondering, is there any opportunity for that market? Because it seems light years behind. And the group that I'm involved in, we're currently talking to and looking at, it's probably a long way off, but looking at another company, I'm sorry, I don't know who's behind it, an app called Snoop, that does certain things in terms of helping you manage your money. So I was just wondering around the overall question around, is the type of technology you're using something that could be brought in to help people who are struggling to access financial services manage their money better, albeit it's going to be a lot less money than most of the customers?
Okay, we are not a bank for the unbanked. We require people to have an address, okay? But we are free. And if somebody, if somebody has an address, and it doesn't have to be, it's an address, they have to be resident in the UK. Right? They can have a Starling account.
Yeah.
And it is free. And it is ideal, right, for people who are managing on benefits. We are, they need a smartphone, right? Yeah. And this is back on another one of hobby horses. I think that, I think we need to work across industry, whether it's the financial services or the telecoms companies and government, to make sure that everybody has access to digital services. That is the way the world's going. You can't live nowadays without a smartphone. Everything is provided through these services, and we can't leave people behind. And it's not just the banks, it's not just the telecoms, it's not just the government. We have to work together, otherwise people are going to be left behind. And people have a right to data. It's just like other utility services. We've got to focus on that.
That's great. Thanks very much. Thank you.
And thank you. I wanted, if I can, to bring in, David Hollander made a really interesting point in the chat about the differences between these different banks and the competition within the challengers themselves. And I saw Karen Basra made a point about the extent to which competition policy deliberately fostered a change in banking. I just wanted to ask you whether or not you think, well, let me bring them both in, because what I would love to do a little bit is just try and understand how deeply the world of banking really is changing, or whether or not we think we're just getting the digitization of all services. David, why don't I go to you first, because you seem to have had, you seem to have been to the sort of equivalent of the buffet bar of digital banks and tried them all.
So I'm definitely a Sunday night spreadsheeter. I love your descriptions, and I see that it's got a lot of people. It's very emotive descriptions, and I've got a number of accounts because I use them like your spaces, because I don't like having all my money in one bank. I guess I'm just nervous of that. Don't want to give you the wrong impression. It's not lots of money. I just like it in different places. But therefore, I've used Monzo and Revolut and a number of the traditional banks and still have accounts with them. And I'm very impressed. I mean, Starling is without doubt the best. I'm a big fan. And it's great that you don't keep selling to me like Monzo do, who constantly ask me to go premium, and Revolut, who have a new idea every day that they want me to buy.
Yeah.
But actually, I don't know why you don't sell more. There are services that I would like from Starling that I trust Starling to give me that you don't provide. And that's the reason why I stay with one of the traditional banks, because of some of the upsell services that they give me.
It's very interesting, your comments. We sometimes have lots of internal discussions about how we sell to customers. We are very reticent about pushing products. You know, we don't think that we want to be a bank that spends all the time trying to upsell you something. It's not, you know, it's not what we do. And just to describe the difference between us and some of these others organizations, Revolut, Monzo, Starling, you know, that's what people talk about. Revolut is basically makes money on FX. They're not a bank, so they're not covered by the Financial Services Compensation Scheme, and therefore they need other ways of because they can't really take deposits or use those deposits. They need other ways of making money. The most Monzo and Revolut are into metal cards because that's a status thing. We're not a status thing sort of bank. We believe in doing useful things. Yes, one of these days, we need to start figuring out what products we should be offering to customers. Today, we have a marketplace where we offer wealth products or insurance products using open APIs. So we link into those services and they link into us. So we do provide a suite of other products we don't offer ourselves. I think that we need to understand what our customers really want. And once we know well enough, and we believe that those products are going to be useful, then we may offer those products. But we're not going to start offering products just because we're going to make a quick buck from them, to be honest. It's not how we do things.
David, thank you. And Anne, thanks too. But we've got about 4 minutes left. So I'm going to do something which is not going to work, but I'm going to try anyway, which is a rat-a-tat-tat of very quick points. Harry Moy has been sort of banging the drum for crypto, and I just wanted to make sure we heard that voice, and that's a real challenge. Karen Basra sort of was making the point about the regulatory environment more broadly. Harry, why don't you go first?
So I was saying that I couldn't unmute myself. I had my thoughts on when it comes to crypto, because I know Starling takes a bit of a different stance. At least it used to, because I'm not sure if you're still banning Coinbase transactions into crypto, but there is an argument that it does potentially create greater financial inclusivity because people with a mobile phone are able to transfer to a wallet without necessarily having a bank account and being decentralized. We're seeing it a lot in Africa. And I was also just generally wondering what your thoughts are on blockchain as a technology. So not necessarily Bitcoin itself, but blockchain and it potentially being used for something like the pound.
Okay, Harry, thank you. And before you answer, I'm just going to make sure we get Karen in as well, so we can take them two at a time. And Anthony Coate, don't think I don't see your hand there. I'm going to try and bring you in just before we're done. Karen, you there?
Great, yeah. Hi, James. So Anne, I think it's just a very quick question from me. It seems to me that actually this is a bit of a kind of UK success story, and our sort of competition regime has been quite good at sort of uncovering weaknesses where there's kind of big incumbents. So I'm thinking kind of particularly the CMA having market studies and things like that, looking sort of in depth in an area and looking at what the challenges are. And I just wonder how important you think that process has been in sort of Starling's success.
Thank you. And Anne, sorry, I'm going to serve you one more just so we can hear Anthony's point, so you can take them all together. Anthony, what did you want to say? Anthony Cope.
Yeah, hi. And I just wanted to sort of say about the digital exclusion scenario, because that's really important, especially for a bank like yourself, which is all digital. I mean, how is that going to work if you don't have a smartphone, if you don't have access to a computer?
Thank you. Anthony, thank you. All right, that's a good way to round off. Crypto and Bitcoin, regulatory success story, question mark, deal with the exclusion problem on digital. Anne Boden.
Okay, fine. Crypto. Yeah, we have not been offering services for people to sort of send to exchanges, to crypto exchanges. We have not been pushing that to our customers. We think that at the moment, it is not something we feel comfortable doing. My opinion on that is changing. And I think you asked me that question in a year's time, I may have a different view. I don't think it's right for us at present to really encourage our customers to get involved in crypto. In a year's time, maybe, not now. Blockchain was the technology everybody was talking about in the last couple of years. Very interesting, but it's not going to change the world. Financial inclusion, yes, the world is going digital. This is how people are, signing up for the vaccine. This is how people are shopping. This is how people are banking. It's going to happen. We must make sure that everybody can participate and is not being left behind. And some people don't have those services. And finally, the Competition and Markets Authority in March 2013 did a report saying that in the financial crisis, the banks had consolidated, and it was to the detriment of UK consumers, and proposed that the rules be changed to allow new banks to enter and apply for land licenses. And that is what allowed Starling to start. And therefore, yes, we are very grateful to that change. It opened up a market, but just note that not many banks achieved it. It was very tough. The rules were not lowered. It's just that the process changed. It is still extremely tough to get a banking license, and rightly so. We look after people's money, and the rules must be tough because we are responsible. We're responsible to those customers, and we're responsible to the Financial Services Compensation Scheme, and the rules must be tough, and that is why it's difficult to get a banking license.
And thank you very much. We're grateful to you for sparing an hour. It's no small thing actually to properly listen to someone in a position like yours, having done what you've done and understand. I would give you the full purple prose about how terrific you are, but my co-founder, Katie Vanek-Smith, has done it so much better. Anne, she's written, you have knocked Angela Merkel, off my ultimate girl crush pedestal. Keep bossing it, keep challenging those conventional wisdoms. Many can learn from you, your mission, most importantly, your style. Anne Boden, I hope that we'll hear from you on many occasions in the future. Thank you for coming, funnily enough, for supporting us when we were just starting. That thing where you're starting and it feels like it's a figment of your imagination. You were there when we got started. It was really meant a lot to us. But I hope that in the course of this year, when there are so many uncertainties in the economy, we're going to keep on doing sessions like this where we try and learn and understand the way in which businesses and banking works. We have, as my colleague Tom Goulding has pointed out, a Future of Money Summit on the 25th of February, where we'll talk about it in real depth, spend a day thinking about those things. But for this morning, thank you. exactly as Katie says, for both the kind of grit and granular approach to the detailed issues, but more than anything, for understanding the spirit it takes to build a challenger business. It's been a great way to start the day. Hope you have a good one, and thank you everyone else for joining us. Anne Boden.
Thank you for all the questions. Thank you very much.
Thank you, Anne.